Bitcoin is still ranging. We have caught the bottom of the range, the local range, at 65.6. And it looks like we are going back to the upper ranges this time. It's very cyclical. At this point in time, we would usually move our stops to break even. So this trade is a risk-free trade, which every trader should dream of. But right now, I'm hoping for a bigger move to 72k. And if we do dip down further, I'm looking to add more to my position. Because right now we've only taken a small position so far at 65.6. Once we get a deeper pullback, it looks like it's unlikely, but you never know. This could reverse at any point in time. This is why we manage our risks to 1R at all times, which is 1% of your capital. Update so far, we are up 1,000%, which is 10x from our initial investment. So if you invested $1,000, you would have $10,000 at this stage. So what I see happening with BTC at this stage is we either hit the 70k initially, reject, and go back to 65. It looks like the range 65 to 70, 65 to 70. Unless there is some major news or catalysts in the pipeline in this bear market, we would probably go further down and hit the 60k retest. So let's have a quick recap on what has happened since Monday. So if we go back to Monday, our initial plan was to either short, if the price ever went up to 70 to 72k, we were planning to short, but eventually the price retraced back to 65k, and that was our initial long position. We took our trade at 65.6. I was hoping for lower, but we'll take what we can. And right now the price is around 67.7 at this point of time, but we did spike up into the 68k. And so initially we made 3 plans. One was to short, one was to long at 65, and one was a deeper long at 60k, retest of the lows. We took a long here. The plan stays the same. If we do retest the 60k low, this would get stopped out. I'll risk 1% of my capital, and then I'll be tradeless until we hit 60k. But that didn't happen. We are currently ranging from 72 to 65 to 72. So now I'm waiting for a take profit position to 72k or 70, 71, depending on the momentum on the market structure. We decide if we will want to take profit at either of those levels. If this does break down and hit my stops, that's fine as well, because I've managed my risk and I'm losing just 1% of my capital. It's very interesting to see what next week holds. I think next week we will continue to range around those levels until we get a clear breakout to, I think, more upside than downside, only because open interest is fading. let's just have a quick look what it's looking like right now. I like to get my stats from Hyperliquid because it's a decentralized exchange. There is no market maker. Well, there is. Well, the whales are the market makers, but in Hyperliquid it's somewhat decentralized, which gives me more confidence. So if you can see open interest right now, we faded down from the beginning of February, and we've kind of stabilized. We haven't increased, we haven't shot through the roof, open interest. We really just stabilized, which says that the downtrend from all this move here, it tells me that it's slowing down. Less positions, people who are short are taking their profits, and it's not necessarily telling me that people are taking longs either, because people are not taking any trades. What this tells me in the macro perspective, shorts are covered and people are waiting on the sidelines to see where the market direction is going. And that also shows me in the volume analysis, volume has dropped considerably. It's flat. So the market has sidelined and waiting for clear direction, clear confirmation to decide if they want to long or not. All this other data is helpful. The inflows, definitely helpful. Even the inflows, daily inflows, is pretty stabilized. There's more inflows than out. This tells me that people are injecting capital, but they're not opening trades, and open interest is flat, so therefore people are sidelined, which confirms my sideline theory. So, key things that could happen. One, we go back to 72k and go back to the 65k. So you can play these ranges. I'm long at the moment at 65.6, looking to take profit at 72, and then looking to short here. You can flip and then just trade the range because the market is flat. So you could short it here at 8th of Feb. You could have longed here at 65 at 12th of Feb. Then you could have shorted at 70, and then you could have longed at 65. So you would have won 1, 2, 3, 4 trades, 4 out of 4 trades, and then that's all. Each of these ones are risking 1R. So this is 3R, 3R, 3R. So you got 9R, and then you keep trading the range, and you get stopped out once. You still have won 9R minus lost 1R, so you've still got a gain of 8R for 1 week. So that's how I trade the accumulation phase, because once you know that it's accumulating like this, you can keep trading it, gain 3R, 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 and then eventually when you lose 1R, and then you reevaluate, you reanalyze, wait on the sideline to see, just take a break. Usually when people lose one trade, they feel like they've lost. So they feel like they want to gain it back because people are stubborn. Well, once that happens, you walk away, take a break, enjoy your weekend, and come back and reevaluate with a fresh mind. That's usually the best way to do it. So we are approaching the weekend. Today is Friday. New York is about to open, and I do believe there's going to be more upside, but once Friday is over, we're going to be chopping, depending if we get a breakout in the US Open or not. But regardless, we will be moving 1 to 2k range in the weekend volume. It's very slow, no point trading. Just set your alerts and just enjoy your weekend. Next week should be interesting. Next week we're just going to quickly check what we have going on next week. So we don't have much macro news that I can see. So we may possibly go sideways for a while. I do believe the bottom is here. I believe the bottom is at 60k. If it wasn't, this would have continued downwards already, if not. Because if you see here, we continuously kept downtrending, breaking new lows. But now, accumulation phase, we are steady. So therefore we could continue to go up, reverse, but we still haven't had that confirmation yet. Confirmation for a reversal would look like that, and then you could retest that break of structure. So what would usually happen to actually confirm your reversal bias, we go sideways for a while, break, and then stay above, go sideways and then break to new highs and then break. That's what I would see the first wick. If we stay above, that would be your long trigger here. Your long trigger would be right there, because the market always gives you opportunity. You just have to wait. People usually, once it spikes, oh no, it's over, chase here. Then once it goes down, get stopped out, lose. And then they start, oh no, it's going back down again. And then they start shorting, hoping that will go down the low, but then boom, it spikes again, stopped out, lose. And then, oh no, it's going up again, FOMO, long here, stopped out, lose before it goes higher again. That's usually how it happens, how beginner traders lose in this market. So until I see that initial breakout above 72k and then it remains steady above 72k, break of structure, because the resistance becomes the support, that's where you were long. And then here we go again. If not, break of structure, deviation back into the ranges, 1R. You lose 1R, 1% of your capital, and that is a good risk reward in my opinion, because the potential is higher than anything. So you could win that, and then your stop loss would be just below that 72k support, which was previously the resistance, and then you have all this upside. Next would have been 90k. There's so many levels where you could take profits or eventually flip short if the momentum was weak. So I'll give you an example. It goes up, take profit 1. Definitely take profit 1 here, which is another key level where there's a lot of consolidation happening. If it breaks through that, or if it doesn't, let's say it doesn't, at that point in time, you should move your stops to break even. And therefore, if this goes back down and hits your stop, you've made 1R. 1R. If it doesn't stop you at break even, then you have 2R, 3R, 4R. And eventually, you wouldn't hold a trade long. Like in this instance, I would not hold a trade above 97, because that was the reversal point where we spiked from, I think it was 70k to 97k, and then we went all the way down to 60. So people that long 70k back then, they thought we're going back to all-time high, and then they held their position. And if they held and not take profits on the way up, they just lost all that money. From there, from the 70, I think it was 70, right? Sorry, it was 80. My apologies. Not 70. I don't know where that 70 came from. From 80 to 97, they would have held. Oh no, we're reversing. We're going back to all-time high without taking profits. They would have been liquidated once we hit the 60k low. Let me just remove all this right. So what I like to trade is the 4-hour chart, because I do believe it's the perfect time frame for Bitcoin in my honest opinion. For me, it really depends on your trading style. The 15-minute chart intraday, sure, but I think I lean more towards swing trading. Well, that's where you get your most gains instead of trading intraday. So just to recap what we talked about. 1, we are still ranging. Our plan is, if it goes above 72k, we're going to take profits. We might even take a quick scalp short just to see that we haven't really breaked through that 72k and we haven't really stayed above 72k. Then that is a good short opportunity back to the lower of the ranges. Step 2, if we don't break 70k, that will be my second TP. 68k is my third. My second TP is 68k. My third TP will be 70, because that's another key level where resistance is. If it rejects, we'll probably close our position, move our stops to break even. We've made 2R and we get stopped out, so be it. Then we would wait for a long at 60k, hopefully, if it goes down there. If it doesn't, it takes our TP back to 72k, where our full TP is. We'll take a short, because I do believe we're still ranging. We are still ranging. So that would be my next potential trade. Well, it has always been part of my plan. If you look back on my tweets, that has always been my plan to short at 72k. But right now, this plan is working right now. Long at 65k, we've hit our trigger. The deeper pull, but once we go to 72k, we're going to take a short back to the 60k range, and then we're going to long. So I think the plan will stay the same next week, because we haven't had much movement this week. We haven't had a clear breakout in either direction. We're still ranging, and my plan remains the same. We've longed here at 65.6. I'm going to take it to 72k hopefully. If not, we're going to take 1R as profit. And then, yeah, see, let's just have maybe a recap on Monday to see if this setup over the weekend, usually a Sunday might dump, Let's just see what happens, and then let's reevaluate, and we can go from there. Anyway, enjoy your weekend. Happy Friday, everyone. Let's make some money.